Let's take a look at an example of multi-time frame market structure in action. We're going to build on the example that we used in the first video on Euro US dollar here. So what we can see is we were in an uptrend. We were making a series of higher highs and higher lows, higher highs, higher highs, higher highs, higher lows, higher lows. And we started to switch to a downtrend, making lower lows and lower highs. I'm going to focus on a little bit more recent price action. That way we can actually look at lower time frame data. But as we can see currently here on the daily chart, we are continuing a bear trend. As we can see that we've put in a lower low right here after breaking this daily higher low. And just before we close the week, we have more or less wicked the daily level. So we haven't actually broken the daily level, making a lower low just yet, but we have started to see some action. But on a lower time frame, what we will see is a break of structure. So now that we have that understanding, we're basically going to concern ourselves with more or less this bit of price action, probably more specifically here, but we'll see how far we can get as we navigate downwards. So let's jump down to the 4-hour chart. And what we can see on the 4-hour chart is, again, if I just go to the daily chart, we can see that I have my structural points mapped with these gray highlights. And when we go down to the 4-hour structure will be indicated with the blue highlights. And we'll just kind of stick right here as we started to switch bullish, which is more recent price action. And as we can see, we were on a downtrend on the daily chart. And we didn't actually get signified that price was switching bullish here on the daily chart until we broke this high right here. But as we can see, if we're mapping out and following the 4-hour charts, is that our real change of character when the 4-hour switch from bearish to bullish happened when we broke this swing high or this lower high on the bearish leg. Because as we can see, we had a lower high right here. And if we just kind of map back just a little bit, we can see that price was in a downtrend. We are making lower lows and lower highs. And I've now just realized I'm using the wrong colors. Just to fix that very quickly. But as we can see, we're making lower lows and lower highs here on the 4-hour chart. As we continue down, the daily chart created a lower low here, a lower high here. We broke, which confirmed this lower high. We then continue moving down, creating a lower low on the daily chart. So on the daily chart, price was stuck within this range of price. And if we were looking for a continuation to put in a lower low once more, we'd be waiting for price to form some sort of lower high and then continue to the downside. And as we know with multi-time frame market structure, on the 4-hour, if the daily is to remain bearish within this overall range of price, if we were to move to the upside, we would start breaking structure to the upside, creating higher highs and higher lows on, say, the 4-hour chart before continuing to the downside. And what we can see on the 4-hour chart, again, is that we broke structure on this point here. We started to create an uptrend. We started to see higher highs and higher lows being formed, especially in this spot where structure got a little bit more tight knit, and this is range created demand, as we would know. And what we can see is what ultimately created this break of structure, this daily break of structure, putting in a higher high would have been this break of structure here. But as we can see on the 4-hour chart, we were already starting to switch bullish around here. We started breaking structural points, creating higher highs and higher lows within the overall trend. And as we can see, price continues on making higher highs and higher lows. We've broken this daily swing high. So when we're looking at the daily time frame, if I just pop open a second chart and we'll compare the daily to the 4-hour just so we can look at it a little bit more granularly. So again, we're looking at price creating lower lows and lower highs. When we look at the 4-hour chart, we can see that price breaks this high and is starting to move to the upside. We can see the momentum here on the daily chart. We can start to see these large candles popping up. And if we're looking at it from a supply and demand lens, we would be looking at this as a potential supply zone that would be holding price. On a 4-hour, we can see it is a very large pivot supply where we get this large sharp up move followed by a large expansive down move that creates supply in the market. And what we can see pretty clearly as well, if we just pop that back on the daily, we have a singular pivot supply candle, this bullish candle before this rapid expansion to the downside. And what we can see is price does react off of this supply zone. So in a perfect world, if we were looking at market structure and we're looking at lower lows and lower highs being created, we're looking at this range in price. We start to see price retracing. Realistically, if we're looking to catch the lower high and look for an additional short opportunity, we'd be looking to identify supply zones that would coincide with the formation of that higher low. So in this case, we have a supply zone here that we would be expecting price to react off of and create a lower high and continue moving to the downside. But what we can see is price does initially tap into the supply zone. We get a bit of a reaction. We start to see a pull away in price, but at the end of the day, we don't get a true follow through. And what ends up happening is we then switch from supply to demand and continue moving to the upside. And what this will be known as is a supply and demand zone flip. We'll dig into those in future videos, but what we can see is this is the first sort of aspect of supply failing. And we're starting to see demand being respected. As I mentioned in the previous video, we're creating higher highs and higher lows. And we're also seeing supply being invalidated or failing. And we're seeing demand being respected, which is creating that bullish market structure. And if we just continue on, we can see that we had a supply zone here as well. This is more of a fractal supply zone. This would be the pivot supply, this last extreme. And what we can see is price reacts off it once again. And as I said in pretty much every video up until this point, that when it comes to supply and demand zones, we are likely going to see a reaction, but it's the follow through that's most important. And what we can see is price does react, and we can even see it on the daily chart. We had 1 day of selling, and then followed by demand being respected and price continuing to the upside to create a higher high on the 4-hour chart and begin to create a higher high on the daily chart as well. And if we just continue on moving, we can see that as price begins to move up, we start to see a series of higher highs and higher lows forming on the 4-hour chart. And we finally print in a daily higher high right here. And then we start to see price moving to the downside. In this case, price doesn't actually break true valid structure. The reason this point is not viewed as structure is because of these equal lows, which is an area of liquidity. We'll touch on liquidity a little bit later on, but something to keep in mind as we progress through. But as we can see, even if we were to have considered this valid structure, price would have broken to the downside, created a lower low, a lower high. We then would have broken structure and continued bullish. And because we know that the daily chart is now in a bull trend and we're expecting a higher low to form and price to continue moving to the upside, we would not be looking to immediately take sell positions just because the 4-hour is switching bearish. Because again, this is the importance of understanding multi-time frame market structure. We're trying to understand what's happening on the higher time frame. We're trying to trade in line with that higher time frame, but using the lower time frame to gauge where entries may be possible and to understand the market structure. Because if we are just blindly looking at the market, not factoring in the daily chart, looking for sells at, say, this supply zone would seem incredibly valid, seeing as this is range created supply. We have a large drop to the downside. We're breaking structure or liquidity in this case and continuing on. We would expect that to hold and sell off. But as we can see, supply is totally ripped through. It's totally disregarded and price continues on. Why? Because on the daily chart, we're creating higher highs and higher lows. We are in an uptrend. And furthermore, what we can see is supply is failing. Supply is failing. Demand is being respected. Demand is being respected. And what we can say, if we take this even one step further, we have range created demand just right here. And what we can see is this next point is held up by demand. And we can see price is creating higher highs and higher lows as price carries on in its trend going higher and higher. And then as we can see, as we just navigate our charts, this is where we start to see that change of character. This is where we're starting to see the beginning of the downtrend that we're seeing here on Euro US dollar. And what we can see is on the 4-hour chart, we create a high, we break that high, creating a higher high, which is also the higher high on the daily. But this is where things start to change a little bit. Again, if we're looking and factoring in the daily chart, we would see that price is in a larger range. We can see that we have our daily swing low here and our daily swing high here. So we're trading within essentially this impulsive leg, this range of market structure. So as a result, we would still be ideally bullish as it stands. But then if we just navigate our way out, what we can see is we are approaching a daily supply zone. So we have a couple different options to look at from a trading perspective in terms of, do we think this supply zone is going to hold, therefore causing price to move to the downside, or do we think it's going to be disregarded and continue the uptrend? And this is where we can start to look at lower time frame fractal market structure to gauge the reaction, and we can trade those reactions. So what we can see on the 4-hour chart, once we tap into the supply zone, we see a large move to the downside quite rapidly. And what we can see initially is that price disregards a demand zone almost immediately. We get a small reaction. As we can see, price does move to the upside, but ultimately that demand zone fails. But what we can see is we do have a demand zone. Now let's just zoom in so we can see it a little bit better. We can use the entire pivot if we'd like, or we can refine it to the most recent candle. All we can see is demand does get respected. So right now we're seeing a series of supply getting respected, demand failing. So we can just draw on that demand zone as well, just for reference. We can see demand failing, demand being respected. This is more an extreme level of demand versus a minor level of demand, because this is more in the lower portion of the range of the daily price action. And what we can see if we just continue on is we have our supply zone here created as a result of price moving. And what we can see is we respect that supply. And realistically, if we were looking at demand, we can see that we have range created demand right here. Price disregards that demand. So we're starting to see that change in the flow of supply and demand. And what we've seen here, once we broke these lows, is that price broke market structure with this large drop here. So we've put in a lower low. We've come back in, we've tapped into supply, and what has ended up happening? We've failed demand, and we've continued down to create a lower low. So what this is now telling us is that the supply zone on the daily chart is starting to change. We haven't actually changed market structure on the daily yet. So up until this point, we are still bullish on the daily, but what we're starting to see is on the 4-hour, we're starting to get indications that the trend may be switching, that this is a true change of character. We're going to start to see that change of character on a lower time frame before we see it on a higher time frame, and that's going to give us a better understanding and identification of what is to come, and we can build trade ideas on that. And what we can see if we just continue moving on is we have a supply zone right here within this inside bar, or even specifically in this wick. Doesn't quite get hit. We have an inside bar. So basically within this area, we can see that there was a lot of trading happening here. Just do something like that. It does wick the supply zone a little bit, but not a big deal. What we can see is we have supply. Ultimately, it's respected, and then price continues down, breaking structure to the downside, creating another lower low, and then price essentially falls off the cliff here. And what we can see is what we had one last level of demand. And if we just draw it on the entire range that was created, we tapped into it once, we've tapped into it twice. We've basically absorbed all of the demand that's sitting at this level. And what that allows price to do is free fall to the downside. And what we can see is price then has created a lower low here on the daily chart. And on the 4-hour chart, then we're starting to see bullish structure. And that bullish structure is in line with a pullback on the daily chart. And then what we can see is now that the daily is starting to potentially break to the downside, we're starting to see lower lows and lower highs being printed on the 4-hour chart as well. And then now what we can do is take it one step further as well and look at the 15-minute chart and just dig into the price action. It'll be the exact same story, but it'll just be even more fractal in nature. So what we can do is we'll keep our eyes on the more recent and relevant market structure, just so we don't get lost in too many details. So we'll look at the recent market structure that has happened since the drop here on the 15-minute. What we can see, if we just start looking at this point in time, zoom in just a little bit more, so we can actually get a good view here. See that we've broken structure to the upside after being in a downtrend. So if I just map on a few more points, just to showcase the trend that was in play up until this point. See that we've broken structure to the downside. broken structure to the downside. So we're creating lower lows and lower highs. Again, if we're looking at this point, it's within this candle. We're in a downtrend on the daily now. It's been confirmed after breaking this structural point. If I switch to the 4-hour and maybe draw these on a little bit better because TradingView is giving me a hard time today. Here we go. That there. Perfect. So what we can see is price again is making lower lows and lower highs. And if we're looking at this on the 4-hour chart, we can see that this bit of structure here is this bit right here. And as we can see right now on the 4-hour chart, we are also in a bearish move. And what we can see here on the 15-minute, the 4-hour change of character and the 15-minute change of character end up being at essentially the same points. What we can see is it's created by these two candles. We see that impulsive move to the upside. We've now switched to bullish, but again, if we switch back to the daily chart, we know that we're still in a bearish trend. And what happens when we are in a bearish trend and we've just put in what seems to be a lower low, we're going to get some sort of pullback, especially after we break structure. A question we always should ask ourselves: what happens after we break structure? We will continue running for a while, but ultimately what's going to happen after that? We need to pull back. Why profit taking needs to happen? The market needs to breathe. It's been over injected with selling pressure in this case. So at some point we need to start to see a relief rally for price to correct, price to pull back, price to retrace, whatever way you would like to describe it. But at the end of the day, the higher highs and higher lows of a market, or the lower lows and the lower highs of the market, is basically the ebbs and the flows of the market. And it's also the market breathing. We're exhaling, we're inhaling, we're exhaling, we're inhaling, we're exhaling, we're exhaling, we're inhaling, we're exhaling, we're inhaling, we're exhaling. If that's the way you want to view it, great. Whatever makes the concept make more sense conceptually, that's the best way to approach it. But as we can see here with the 15-minute and the 4-hour, we start to get an alignment of market structure where we get this large expansion to the upside, and it creates the 4-hour swing high as well as the 15-minute swing high. And we'll just switch this chart back to the 4-hour again, just so we can see a little bit more structure. Once again, the highlighter's being funny with me. Just like that. What we can see in this case, we then break structure to the upside. And what we're doing now is we're just waiting for more confirmation as to what's actually going to happen. Got that. That's our structural point. And what we can see when we're looking at the 4-hour as well as the 15-minute, we have a structural point that is mapped. We're basically caught within the range of price, this leg of price right here, which is from this low to this high. Not sure why that's not appearing. And as we can see, price is caught in a very large range in price. And what I have here with these green circles is substructure, just mapping out and understanding what's happening while we're stuck within that range, because often what we can do is we can start to get a good indication of what may or may not be happening, and we can start to make trading decisions based on that on an intraday perspective. And as you can see, we have a few different zones mapped out. We have a supply zone, we have a supply zone. We're in an overall higher time frame bearish trend. We're bullish on the 15 and the 4-hour, and we're starting to see a large aggressive pullback. We can definitely say that this is quite impulsive to the downside. So what we want to be seeing is demand failing and supply being respected. So what we can see within this wick, which is a refinement that you'll see in video 4 in the supply and demand series, there is a demand zone resting within this wick. And what we can see is when price tests into that wick, we get a strong reaction. We have a supply zone that's resting within this inside bar, again, video number 4. And what we can see is price respects that as well. So we're caught between supply and demand, and now it's a matter of what is going to hold, what is going to start failing, and what can we start to gain from that? Well, we know that the 15 and the 4-hour are predominantly bearish currently, but we also know that the daily is bearish. And what we know is right now the daily is in a phase of correction. We're waiting for price to find a lower high to continue to push down if it is in fact going to make a lower low. So when we're looking at this bit of price action, we're just waiting for demand to fail and supply to be respected if we are to go bearish. But if we start to see demand being respected and supply starting to fail, then that can start to give us a solid indication of what is to happen next. So what we can see is overall this demand zone is holding price. We can see that this supply zone ends up failing, And then we can look at the next supply zone, which is this inside bar. We get a slight reaction just prior, and at this point, price then continues moving to the upside. One other area that we could look at is within this wick. This would be that continuation pattern, again, spoken about in the fourth supply and demand zone video, where we have this continuation supply zone. We get a strong reaction and price then begins to move to the downside. And what we can see is we failed demand, and price continues dropping. But again, where do we drop into? We drop into a demand zone. Now, one thing I want to stress though, when it comes to multiple taps of a demand zone, is the more taps you get into a supply or demand zone, the weaker those zones are inherently going to get. So at that point, although this is propping up price as it currently stands, it's something that we should be mindful of as price begins to develop that it can only hold for so long. And once it's tested too many times, then likely we'll see a break of that level at some point. But as we can see, demand is being held. And at this point, what we're looking at is still a continuation of the overall bull trend. And what we can see is price then continues moving to the upside to continue pushing higher. And then we can see, again, we're still caught within this overall range. We've just broken 15-minute structure, but we didn't actually break 4-hour structure. So this should actually be different color. Plop that on. There we go. So we've broken 15-minute structure, but if we look on the 4-hour, we didn't actually break that 4-hour structure. And what actually we can do is move this right there, because this would be our highest point within the trend. But we've never actually broken that bit of structure. And then what we can see is we get a violent sell-off. Price continues on. We create a supply zone. Price taps into it. We're respecting supply, and we're starting to break demand once again. We can draw a demand zone in this particular area. We can see it does hold initially. We get a reaction. We tap into supply. We respect demand. We're now having the dance of supply and demand. We can see that we do have a demand zone right here that is initially respected. We come back in, tap into supply once more, or fractal supply that's resting within these wicks. And what ends up happening, price then moves to the downside and starts to switch to a bearish trend on the 15-minute. What ends up happening as we continue moving further on is that price then breaks the 4-hour low, which is this low right here. And now what this has created is a downtrend on the 4-hour and the 15. So we're starting to really get confirmation that price is moving to the downside and that sells are on play. And what this is going to also help us understand is that more than likely the daily chart is going to start to continue moving to the downside, if in fact that was the lower high that was printed on the daily chart as well. And what we can see if we just continue following market structure is we are breaking structure to the downside, creating lower lows, lower highs, lower low, which is our true 4-hour lower low. We can see price creates a lower high on the 15-minute chart, consolidate, creating a larger supply zone that we can see on the 4-hour chart right here. And then price begins to move to the downside. We create a new lower low on the 15-minute chart. Price then begins to more or less move sideways that we can see on a 4-hour chart, but we can get some structure on the 15-minute chart, and which we can see, again, we're looking at a potential pullback on the 4-hour chart because we have something that looks something like that, which is lower lows and lower highs being printed. And what we can see is the 15-minute chart then switches bullish to accommodate that lower high that is being printed on the 4-hour chart. And then what does price do? It continues to move to the downside. And again, all this is doing is following the daily structure. We're putting in lower lows and lower highs. We put in a lower low, we pulled back, we created what appears to be a lower high. But again, we haven't actually closed below this structural point. So for me right now, this isn't a confirmed lower low, but it's definitely a good indication. We were able to understand why price was beginning to switch and seeing the changes of characters that were happening as we look through the 15-minute and the 4-hour. We can take that a step further and begin looking at 1-minute market structure, but that's a little bit more advanced. And personally, that's what I use for entries as opposed to looking for pure market structure. It's best to have, say, a 4-hour and a 15-minute time frame for your market structure, and then have an execution time frame that you're using for actual entries when you hit the particular points of interest, supply or demand zones that you're trading within the overall direction of the 4-hour, 15-minute, and daily market structures, and not sitting on the 1-minute chart just looking for breaks of structure and trying to trade with that. Of course, you can frame up a lot of great continuation trades at a more advanced level, and we'll get into those intricacies. But for now, it's really just about mapping out your daily, your 4-hour, your 15-minute structures, and really understanding how each of those timeframes play together to build that overall trend. What we can see is quite easily that the 15-minute was building the trend before the 4-hour and then before the daily. But what we could very easily see too is that it was following the higher time frame trend. We had a good indication of what was actually going to happen on the chart conceptually using market structure, but then we were able to take it a step further by integrating supply and demand. Now, I know that I have more than likely missed a few supply and demand zones as we went through this example, especially if we were to include the examples of supply and demand zone flips, which we'll get into. It'll start to make understanding market structure even easier, even when we start to combine liquidity concepts and things like that. But again, we're going to start from the foundation and build onto that. So right now, the main idea and the main emphasis is on building out the structural components, understanding how daily 4-hour, 15-minute structure plays with each other, and how trends are built and how they follow one another and how they deviate from one another, how we can include supply and demand into those concepts to better understand what is happening. When we see demand being respected and supply failing, we know we're likely putting in higher highs and higher lows. If we start to see supply being respected and demand failing, we're probably putting in lower lows and lower highs. If we start to see supply being respected and demand being respected, we know there's a little bit of a fight that's going on the charts. We need to be a little bit more patient and wait for market structure and order flow to really showcase what it wants to do. And we can see that as we wait. Like we've seen here, price was caught in a range. We were starting to see demand being respected, supply initially being respected, but then ultimately starting to fail. It was respected, ultimately started to fail, and then we did continue on, but we were able to see the inner workings of that. And from a fractal nature of price, well, we are able to execute trades on a lower time frame for more intraday setups within all of these ebbs and flows, or we can frame up trades on, say, a 15-minute chart using this information as well. This all becomes data to build out trade ideas and understanding of what's happening on the various timeframes. But again, it all comes from the understanding of what's happening on, say, a daily time frame, understanding the structure, understanding the higher time frame supply and demand zones that are happening and that are being created, what they represent, how they relate to structure, and all of the inner workings in between. Once you can truly understand that, things become a lot easier to understand. Things become a lot easier to manage in terms of building overall trade ideas. Often what you'll notice, probably in previous ways, especially if you have traded supply and demand before, is that you're very good at picking supply and demand zones, and you probably found this through your back testing, that you're very good at picking supply and demand zones, but often you're picking the wrong ones, in that you might get an initial reaction, but price never follows through, and you seemingly seem to be on the wrong side of the trend all of the time, or most of the time. When we start to integrate market structure, the relationship between supply and demand and market structure, that's when the light bulbs really start to come on. Then we'll start throwing out liquidity concepts to really start to improve the odds of where price is bound to go, and start to throw in advanced supply and demand techniques using supply and demand zone flips, where we're going to be able to build a very robust and rule-based oriented trading strategy. But again, we need to start at understanding and mapping out market structure. So what I strongly suggest and encourage is hitting up your charts and starting to plot out market structure conceptually, higher highs, higher lows, things like that, getting comfortable with the fractal nature of the markets. Now, I know we haven't necessarily discussed in detail how to map out market structure in a more rule-based system, and we will do that in the next episode. But for now, just hit the charts, get comfortable with understanding the fractal nature of the markets, get comfortable seeing how the daily, the 4-hour, the 15-minute, for example, interact with one another, and get comfortable with seeing how the trends form on the higher time frame and go down to the lower time frame, and how the trends form on the lower time frame and go to the higher time frame. Because once we have those building blocks, once we have that proper foundation, we're able to make better decisions, and we're able to better understand the market and how it is moving, where it's likely to go, and we can start to build stronger, higher probability trading ideas. And this is where the link of market structure and supply and demand really starts to come into play, by being able to vet out certain supply and demand zones, understand how they work with market structure, and start to understand when a supply and demand zone is likely to be respected or when a supply and demand zone is likely to fail. So now take this to your charts and see what you can come up with.